Welcome, everybody, to Blue Collar Startup, the podcast where hard work meets big ideas. This is your home for real talk and real strategies from the front lines of life and the business of the trades. I'm your host, Derek Foster from Dago Cleaning Systems.
I'm one of your hosts, Mike Nelson from Five Towers Media.
Let's get to work.
Yeah, man. What's up, D?
Oh, just out there catching up from everybody being off for 2 weeks, but it's been a busy start to the year. So just grinding it out and looking forward to everything that's going to happen this year. It's
Yeah, man.
exciting. And I
I,
see you're in the car. Make sure you're driving safe.
as our guest said, he's familiar with this office. Yeah, I'm in the car. This is one of those days where I'm all over the place, and the podcast was smack dab in the middle. So, you got to do what you got to do, I guess.
Absolutely. Yeah, and we're super excited and for our guest today who actually reached out, found us online and got a great story. So really excited to introduce Shenar here in a second. But before we do, just wanted to remind all of our listeners about the new episode formats that we have out this year. So this is our traditional business interview from the field, where we bring on folks who have work in or have built a business in the trades and have come onto the show to share their story and tell our listeners about what they've been able to build and accomplish and lessons that they've learned along the way. We also have a format we like to call the lab, where we ask Bill Tanzi from the OpEx shop a bunch of good questions on building and scaling businesses, and we're very fortunate to be able to bring him onto the show to do that. We also have Catamount Consulting and the team coming on for some roundtable discussions on leadership, training, development, and then also our Women in the Trade segment, which is new this year. So Stacy Spector of Catamount Consulting is going to be joining us with some of our Women in the Trades guests. So we're really excited to showcase some of those hardworking women out there. As a reminder to everybody, we also have our Patreon segment of the episode. So we're going to go through and listen to our guests and what they have to say and share their story. And then we have a bonus segment, so to speak. It's a whopping $5 a month to join the Patreon account. So please help support the show and jump on there to hear some extra nuggets and extra sauce. So without further ado, I do want to introduce our guest today, Shenar Wood.
Hey, thanks for having me on, guys.
Pleasure
Absolutely.
to have you.
Thanks for the time.
Yeah, yeah. Sorry for the audio problems there to kick it off with, but I think we got it straightened down now.
That's what we do. We solve problems, right? That's what
That's
it's all
right.
about.
In the
Where
field
would
at
we
that.
be? Where would we be without our obstacles, guys?
That's it. That's it.
So, Shinar, why don't you tell the listeners a little bit about what you've done and what you've built? Really excited to have you on here, and thank you again for joining us. So, take it away.
Yeah, yeah. So my name is Shenar Wood. I'm president of Dynetek Solutions. Started the company back in 2014, and what Dynetek Solutions does is we work with the power utility companies around the southeast here, and pretty much all over during storm season as well, where we really focus on converting overhead power lines to underground. So we're pretty niche in that sense. Was able to grow the company out, like I said, from 2014. 2 years ago, I recently sold to private equity, and I'm on the tail end of that. And it's just been a journey and something that I'd like to try to pay forward to guys that are in the trades and don't really understand that world, but looking for an exit and what that would look like and how to exit from your business.
I got to ask, how did you get into converting overhead power grids to underground utilities? Like, how did you get into that and start Dynatek?
Yeah, so very unorthodox way. My whole career has been unorthodox to say the least. So I was going to college, but I was broke like every other college student. But my brothers were in the trade, and so I'm like, hey, can I come work for a semester or something and get some money? And they were like, yeah. So during college, from 97, or excuse me, 98 all the way up to 2001, I was in and out of college. I would go into the trade field and learn as much as I could for a semester or 2 semesters, come back to college. Then 9/11 happened, and I dropped out altogether from the workforce and went and enlisted into the military. Done that for 4 years, and as I was getting out, the '06, '07 market was crashing. I was like, probably not the best time to get out of the military right now because I've got a stable job and career. So I finished my degree and got picked up for flight school. Flew Apache's Blackhawks for another 6 years, and then it's like, hey, between the deployments, I'm like, either I got to do this for another 10 years or I've got to get out. And I decided to exit. And then when I got out, I'm like, I don't really have a job and I've kind of missed, the corporate ladder and everything else. And the only thing I knew was this trade. And so I was like, you know what? Let me just start my own business. So I went and bought a directional drill, like a lot of blue collar trades, and went in debt and like, oh crap, how am I going to get out from underneath all this debt? And it's like, I got to grow this thing out and try to sell it because I think the one thing that we all realize is it's nice to see all the trucks, the equipment, the big yellow iron or whatever it is in your career field or your trade. But at the end of the day, that's pennies on the dollar at the auction house, right? So how do you build a portfolio and how do you sell it? And have your books in order to show that you've actually built something that you can sell to someone else and they can scale it out past that.
What
That's
was that
interesting.
like making the decision to pull the trigger and purchase that equipment? Because we just recently talked about that
Yeah.
on an episode.
Yeah. So mine was burn the bridges mentality. I got out of the military and I didn't have a job. So I was like, what is the quickest path to cash? And I was like, I'll go buy a drill and I'll go get a subcontracting type agreement set up with somebody. And I knew enough people in the industry that I could probably land a subcontracting type work. And bought one drill and I was like, hey, this is great. But again, I don't want to, these are not types of jobs or careers like I'm going to pass off to my two girls, right? Like it's probably not going to be fair to my girls to be married to this business. So it's like, hey, I've really got to grow this out. Like it can't just be the one drill because we can have that lifestyle business that you're working in your business or you're working on your business. And so you got to change that mindset of like, I got to grow this out so that I can get out from underneath it. And to do that, you got to go deeper and deeper in debt to grow a lot of this out. So you got to be
How did you?
comfortable with debt.
That's amazing.
How do you, when you were thinking about growing it out like that, like you're obviously you've got to have the revenue coming in to support it. I'm curious how you manage that equation of I need to grow this out, so I need to buy more equipment, but I also need to make sure I got business coming in. I mean, did you already know that the business was there if you scaled, or was it like I need to scale both my sales and marketing and my production?
Yeah, so we're unique and somewhat insulated in the power space, in that we're dang near recession proof. Everybody's got to have power. Now, what you're not able to see is the amount of workload, but if they're telling you like, hey, could you add another drill? Could you add another crew? The answer is always yes. And the pushback is like, well, how much work can you give me to support that extra drill or that extra crew? And if you're comfortable, usually with the power companies, like if they're telling you that or asking you that, chances are that they're going to take care of you and continue to grow you out. I mean, the power companies have the ability to grow any business out, just because they don't want all the capex on their books, and so they're happy to shift that to the contractors. Where we started thinking asymmetrical about this was like, hey, there's a lot of good companies out there that do overhead work, but not a lot of companies focus on the underground portion of it. And so that was my little niche of like, hey, we're gonna be really good at the underground portion, and then hopefully and eventually grow into the overhead side.
So, are there things that you did when you were in the business? Because I'm assuming that some of your, and correct me if I'm wrong, some of your contacts that you built were from your time in the trade and learning the business. What was that like as an employee, and how did you build those contacts in that network to be able to then leverage that down the road?
So I'll use a military analogy, right? Like we all start out as, I was never a lieutenant, but everybody starts out as a lieutenant. But eventually a lieutenant becomes a general. And so as these guys are young in the trade, that 10 years I was away in the military, a lot of those guys continued to stay on in that trade and they just moved up in the organizations or in different organizations, but stayed in the trade. and I still kept in contact with a lot of those individuals. And so uh, when I got out and before I went and bought the drill, I knew that I could get a subcontract and was able to land a subcontract up in Lexington, Kentucky, and stayed up there for about 9 months until I got back into the power space and was able to, transition back into power as opposed to the telecommunications up in Kentucky.
Okay. Very interesting. So how did you then take that? You bought the drill, and were you doing a lot of the work yourself in the beginning, or did you have a team that you had already kind of put together before jumping into it?
Yeah, this is the part where it's like every other blue collar trade. You're on the drill that day, and at night you're in the books. Like you're getting your invoicing out. You're doing your HR, your marketing, your DOT, whatever, all the other admin functions that are out there that are in this line of work. You're doing that at night, maybe it's from 6 to 10, 6 to 11, 6 to 12 at night, whatever it is. And then you're back at it in the morning because you're so small, like you don't have the overhead. I mean, you don't have the profit margin to sit there and say like, oh, well, let me just hire a staff, right? Like you don't have that capability. And so I would tell you the first 90 days to a year in a lot of these trades is like, hey, it's going to be you in the field and it's going to be you on the books until you get that profit margin profile that you want that can afford that functional support that you see to help start scaling this.
Yeah, very similar to what I mean, I've experienced and what we've heard other guests share as well. And I think that's an important thing to touch on. It's not easy. How long did that take before you did hire some help?
So I was still pretty lean for the first 3 or 4 years. I mean, crew wise, like not lean because those are my revenue drivers. But it took 3 or 4 years to finally, I'm like, hey, I really need an HR person because I just hate doing HR work. Like we need it, and there is, you got to have it, but it's like I absolutely didn't like writing policies about HR. Could care less about it. It's not that I care less about it. It's just it was just not my thing. And so I was fortunate enough to talk my wife into taking that over for me. So uh, I roped her into it, but she's got her master's degree in HR. So I was like, hey, honey, I think this has got your name written all over this, right? And so she volunteered and helped out and was tremendous in that piece of it. The one thing that I would tell you that as you're building these out that I didn't realize is, you know, a lot of operators or a lot of business owners are really good at their trade itself, right? And like I didn't like HR. Most guys don't like the HR or the finance or the accounting piece of this. And the one thing that I learned was from the accounting side, we would all just file taxes like, hey, I just want to get the taxes filed and I just don't want to have to pay anything, right? What I didn't realize is like as you continue to grow and you're looking at bonding and surety and all this other kind of stuff is if your finance or your books doesn't make sense or they don't tell a story, it's hard to going to continue to keep getting financing, right? And so I would say the one thing that I missed out that I wish I'd had early on was like a fractional CFO come in and help out with the books, as opposed to like, hey, here's a CPA and yeah, they do your taxes and then you don't see them again for another, 12 months or whatever it is. And they're only there to file your taxes. They're not really telling you anything about your business and how well you're performing from day to day or month to month. And that's the biggest piece of the pie because it took me a little over $200,000 to get our book straight. And why that is they charge you by the month to go back for the previous 36 months, $4,000 or $5,000 to recreate all your books and to get all your financials in control. And that was one of the big pieces for me to grow out was I needed bonding so I could bid on bigger jobs because I was starting to hit a glass ceiling. Well, because you take on so much debt, it's hard to get bonding because you're so debt leveraged. Surety companies like, oh, well, you don't look that healthy because you took on debt for all your equipment. We would always push back and say, well, how do you grow? Like the equipment is what drives my revenue. And so that's a piece of this where you start to feel a glass ceiling a lot with our industry is like, hey, I can't continue to grow because I'm so debt leveraged and all the trucks or the equipment or the tooling or whatnot. Uh, you just can't go bid on the bigger projects. And so that fractional CFO really helps clean up a lot of that for you as you start to build out.
I'm going through a similar thing right now.
Yeah.
Getting it all cleaned up, man. What a process.
No, it is, right? But I mean, like, I just thought, hey, if CPA should handle every bit of this and have your books right, but that's not the case. I mean,
Yeah.
yeah, they'll get your books right to file taxes and it'll pass the sniff test on that. But as far as like, hey, how operationally, profit margin profile, what does that look like for you guys? Is your EBITDA this or is it that or whatever? What are the KPIs? I was just sitting here looking at basic micro units of like, hey, if we get this much production, this is like a basic cash flow. But I will tell you that you're slowly backing up if that's the way you're analyzing your books and like, well, I got money in the account this week. Like, that's probably not how you want to manage the business.
Yeah. I can make payroll. Woo!
Yeah, that's it, right? And that's a struggle. That's a struggle as a startup in this line of work, right? Like we've all been there. It's like, oh man, it's going to be tough this week.
Yep. Yep. I'm curious, you mentioned using a fractional CFO. We've been talking a lot about scalability on the show recently, whether it's Derek and I, or with guests, or with Bill over at the OpEx shop. It sounds like you are a proponent of using outsourced methods to help scale, at least in that instance.
Yeah, the quicker you can automate that kind of stuff to a fractional, whether it be fractional finance or accounting or CFO or fractional marketing. I don't know if you need marketing. I mean, depends on your trade, right?
Yeah.
Fractional HR, like any of that stuff that you can automate, take off your plate. A lot of us have that mindset, well, like that, oh, that's another expense. But that actually is the thing that's probably holding you back from being able to grow because it's taking energy away from your day to day to figure it
Yeah.
out yourself, as opposed to, hey, if I just pay this guy $2,500 a month and it's just 10 hours, like that's all I've got to worry about. And
Yep.
and I can move on and probably be more beneficial to the company in these other areas, driving crews or cleaning up efficiencies in the field.
Well, we've been the last couple episodes, Derek and I have been talking pretty heavy about org charts, right?
Oh,
And
yes.
we were talking with Bill Tanzi earlier. We recorded an episode earlier in the week, and we were talking about coming up with that org chart and then playing pin the tail on the donkey with whose name goes in each spot on the org chart. And like at my size, my name is in a lot of those boxes on that org chart, man. Like
Yeah.
too many boxes. And looking at like, I can't afford to hire someone like a full-time HR manager. Can't afford that right now. But
Right.
using that outsourced solution sounds like an amazing way to handle that.
For me, it was. And I mean, looking back at it now, because I was in that same boat, like, man, I can't afford it. But I would argue that you can't afford not to.
Yeah.
Because if you look at that org chart and you look at every decision flow that rolls through you, you are actually in essentially the paradox or the bottleneck for your own company. Like you're hitting that glass ceiling that you're bottlenecking your own growth because you're not able to ability to hand these off to other people.
Mm-hmm.
Like even if it's a fractional, if it's just 10 hours a month, that's just 10 hours is a full day's worth of revenue for you that you can increase somewhere else.
Yeah. Well, and me being like in my situation, me being the chief sales guy, I can sell a lot of stuff in 10 hours.
Right, right. I mean, you're
Right?
smiling and dialing for 10 hours. You've got this.
Hey, yeah, man, I can get a lot of work done with that 10 hours.
Right. And so, but I mean, it takes things off of you. You're like, hey, I really don't care about doing HR. We'll use HR, right? And I don't mean to throw off on HR, but it's like, you don't want to be tied to HR. You would much rather be doing sales. But
Hmm.
from a legality standpoint, from a workers' comp case or any of those things, God forbid, like you want to be able to hand this off to someone else that you're like, yeah, I know about it. I can speak to it, but I'm not down in the weeds and the details of that because it's really pulling away from your business at that point.
Hmm. No, it's a great point.
Shinar, would you say that though that which one of those, if that was even your biggest challenge, but one of the questions that I had for you was what is the biggest challenge that you faced while scaling Dynetek?
So it really came into the P&L, the balance sheet, the surety bonding. That was my ultimate glass ceiling that you can grow these businesses out very methodical and very slowly. but I did not want to be in the industry for 30 or 40 years. If you want to take that approach, you can, and you very well will get through the glass ceiling. My thing has never been to be like, oh, I want to do this for 40 years. Like I want to build it out, grow it, sell it. You realize that you can grow so fast. And when you feel that glass ceiling of, I can't grow unless I take on more debt because I'm not liquid enough that I can just go acquire $2 or $3 million more of debt. Um, that because you've got to take on that debt, you run that. So it's a 3-to-1 like debt to revenue ratio that they're looking at specifically on the balance sheet. And when anytime you come above that, you're not going to get the bond. Well, if you don't get the bond, you don't get the revenue or the bidding that you can go after. So it's like the chicken and egg kind of conversation,
Hmm.
right? And so for me,
Mhm.
that was always the biggest challenge. If you decide to grow slow, you will eventually come over that, but you got to be consistent and compound the consistency every day of, hey, it's good margins, but it's not, I can't go after the big projects and I'm not going to see the rapid growth of, hey, I don't think none of us expect to grow like a Tesla and it's 300% year over year kind of thing, but it's like, hey, I'd like to go from 25 employees to 50 and 50 to 100. As you start to compound that, like you're going to run into the roadblocks of, a capital or liquidity type thing that you've got to overcome. Doing that fast, the only way to do that is like you're going to take on debt financing or because you're not, I hate to say it, but we're not sexy enough for traditional banks. Like you're not walking into Bank of America and say, hey, I'd like to get a $10 million loan. And like, what do you do? Oh, I build houses. Like, we'll finance the property, but we're not going to give you a loan for that or for your growth or whatever, right? You can go the SBA route, but again, you just acquired more debt by taking on that line of credit. And so it's always this fight on your balance sheet of how much debt you're actually carrying. For us, that was my breaking point. I'm like, the only way to outdo this is sell to private equity and, try to grow from their platform.
You make me think of a term that I learned a couple of years ago. I'd never heard of it. And apparently it's used in banking and in insurance. But how they tell you no is they say, we don't have an appetite for that right now.
Right.
I was like, the first time I heard it, I was like, what? They're like, we don't have
Yeah.
an appetite for that right now. And I'm like, an appetite for like, what are you talking about? And like, yeah. So
Mhm.
you mean you're just telling me no, you're not going to do it? Like,
Yeah, just tell me
okay,
straight
yeah,
up, like you don't like it or like it's not going to happen. Like, all right, move on.
yeah,
But an appetite, yeah.
yeah,
Uh,
yeah.
so no,
Hilarious.
it's funny. I mean, and there's other types of financing out there, but like we're not that you couldn't do angel investor type stuff, but it's angel investors are looking for massive upside, right? For technology advances or what may have you. Like no one wants to be an angel investor for you to go buy a skid steer and a dump truck. Like there's nothing there's nothing attractive about that for pretty much any investor.
Yeah,
And
that's
So,
that's fun.
I mean, we all know those guys and I appreciate those guys, but man, it's think about it. The dump trucks today, 150, $200,000 skid steers, depending on the size or the track hose, another 50, 70, 80,000 again, size wise. And then the trailer, and then you got to have the insurance above that. Like
Yeah,
it's like, man, you know, three or a quarter million in debt easily, or 300, 500, half a million in debt. And you're just hoping to keep the work flowing to make the payments on all that.
yeah, yeah. It becomes a vicious cycle, right? Like you get the
Yeah.
equipment to get more revenue, but then you gotta, like now you're imprisoned by all that overhead that you got.
Yeah. And the other part of it too is, like I said, you've got to be comfortable with debt. And a lot of guys are like, when they think of, oh crap, I've got $2 or $3 million of debt, they're not sleeping at night. And I get it, but you got to be comfortable with that aspect that you're the personal guarantor on all that debt.
Yeah, you have to go sideways.
Yeah. Well, we all know there's slow months, right? And like, hey, maybe it's not getting paid this month. I'll definitely get you paid. It just ain't happening on this timeline.
Hmm.
so one thing when you originally had reached out, Shinar, you had on your notes here that you instituted a Friday leak check. And I can
Yeah.
imagine that, while taking on debt is scary enough, you also have to worry about managing people and customers requesting change orders and trying to get extras out of the company. So what is the Friday leak check that you implemented? And I would imagine that helped you sleep a little bit better at night.
It does. So the one thing that we started was actually, I'll just give you an example. If you take on a project, I will know every piece of revenue on that job. So in the utility space, there is a price for opening up a hole, placing something in the hole, and then covering the hole up. At a minimum, there's three line items that's got to be there. So what I made the guys do is ensure like, hey, we're going to look at everything on these projects. We're going to know exactly what's in billable on these projects. So that again, let's say a project is $10,000, and then they come back to me and they're like, hey, well, revenue this week is only 8,500. I'm like, well, are you done with the job? Yes, well, we're done with the job. Then why do I have a $1,500 delta, right? Of difference of we said 10 and here's 8,500. And what it was doing was actually pausing or causing the GF or the foreman to look and say, oh crap, did I miss something? Or did something happen? Like it made them stop and pause, like, oh yeah, I did forget to bill for this extra transformer that we set. Or like, no, we're not placing that transformer because it got moved, or we're not doing that section or whatever. But it was the ability to sit here and like, hey, we're looking at before and then after the fact. And it's not a glossary look over. It is at the end because you did all the hard work up front. But on that Friday, as you go through it, we already did the hard work on Monday to look at to see what that revenue should have been. And anything that's off, and if it's within a point or two, so be it. But if we're off big time, like, hey, what's caused this big gap in this delta right here? And really putting the ownership at the GF or the foreman level that owns this part of it. Like, hey, this is your bonus right here. Like, if you're missing that you're probably not seeing a bonus later on down the road because you're not capturing all your billables and you're just leaving money out there. And the thing is, no one's going back to check you to say, oh, you forgot this, or oh, you forgot to bill me an extra $1,500 or $2,500. If you miss it, you just kind of miss it, and it's kind of forgotten about.
So
So is
that
that an in-person meeting that you would sit down with your team and have every week?
Yeah, every Monday
Okay.
morning. Yeah, every Monday morning to go through to their workload, and then we itemize every bit of their workload. And it sounds like it does two things, right? It does a couple things actually, or more than that. So what it does is it forces them to look at their project and to lay out their crews appropriately, that they can be profitable at the crew level as well as the project level. Uh, but it also has them in touch with what's going on all their job sites. So they know exactly what they're looking at, where everything sits on those job sites. The ability to, my thing for them is if you're a GF, you should be able, and this sounds horrible to say it like this, you should be able to lead from the truck or pull up from the truck, look out from the truck, know exactly what's going on based on everything that you laid out that Monday morning. And not have to get out of the truck and say, hey, what's about this? Not to necessarily micromanage the guys, but you've already went through it. You've already laid it out on paper Monday morning. So by Wednesday, you come out there, you know where you should be theoretically on that project. So by Friday, you're like, hey, Wednesday you were here, you were tracking right along. What happened here? Did we miss billing, or did we just not get it accomplished because crew A was out, they all got sick or whatever, or it was a rain day, something that caused you to miss that. There's got to be a plausible answer or question there that's got to be asked.
I'm curious, what was it that caused you to put this into practice?
Because when I would go through the projects, I would look at it and I was like, hey, I would start asking myself, like, did we bill for that? And I'm started asking myself, like, oh crap, I did it one year, uh, and I probably had missed $75,000 of billables when I went back through all the projects. And I was like,
Yeah,
so on $1 million, that's almost 10% of your revenue.
yeah.
7.5 for sure, right? So I mean, you're leaving 10% of revenue on the table just because you didn't have something to have a checks and balances to catch your revenue.
It's a lot of money.
That's a lot of money,
Yeah,
right?
it's
Well,
a lot of
and
money.
you're not losing it on days 1 through 5. It's through the course. I mean, it's that slow leak that you miss out through 365 days of the year.
Yeah. I was actually just on another podcast I was listening to recently. They were talking about one of the biggest silent killers of businesses, small businesses, is just that unbilled revenue. That
Yeah.
you paid for the work to get done, but for whatever reason you never billed it out, and every business is guilty of it, and it can add up to a lot of money. And for small businesses, especially, if you're only doing 1 million a year, that's a lot of money. That's
Well,
like,
I mean, that was probably your whole insurance premium like bundle, like your inland marine policy and your workers' comp and general and liability and all this other stuff. Like that
yeah.
has real consequences for any company, and so you got to be able to identify that. And I think a lot of guys they're not there yet to really analyze that or think through that, but you got to have those checks and balances of, hey, where it's those blind spots that's really eating you alive, and you don't even know it. And that's what the
Mhm.
killer in a lot of this.
Yeah. And I know we got to start moving our way towards the Patreon side of things, but I do have a question about something you said earlier too, and then Deacon pull us back on track. But you, it sounds like when you originally got into this business, you got into it beginning with the end in mind that someday I'm going to sell this thing and to go do something else.
Exactly right. So I will tell you, there's nothing proprietary about what any of us do, right? Like you could start my business tomorrow, I could start your business tomorrow.
Yep.
There's not a lot of barriers to entry. Maybe there's some good old boy networks here and there and that kind of thing. Outside of that, there's nothing to keep me from doing what you do and vice versa. So knowing that this is not the next Facebook or Tesla or whatever, you can't be married to your ideal and that it's your baby. Like know that there's the next, podcast coming up or the next dynasty. It doesn't matter what it is, right? Like
Mhm.
this stuff is all replicatable. So you got to be with a notion like, what is the end goal in mind to be able to exit from this? And so for me, yes, it was an organic growth to figure it out. If I had to do it all over again today, I would probably cut that timeline in half easily. And because there's not a lot of room where when you get to year 4 or 5, when you're talking strictly EBITDA, you're probably not going to gain that much more in EBITDA. So your valuation's not really going up from years 6 to 10, right? And so what I mean
Mhm.
by that is if your EBITDA is at $1 million, and let's say you're for simple math, 5x EBITDA. So that means your company will sell for $5 million based on $1 million EBITDA. Okay, if you take to do let's say $1 million, that's $10 million in top line revenue. So for you to do another $20 million, what's that going to take? You got to double everything. Chances are from 6 to 10, unless you can visibly see and know that you're going to double that revenue and you've got a clear path to that, you're probably not going to do it based on the current workload and trajectory. And so you're going to spend another 6 to 10 years and only create 100,000, 200,000 worth of EBITDA, uh, if that, right? And so you stayed another 5 years to gain another 500,000 or $1 million. Was it
Mm.
really worth it? You could have probably gained that in your new venture, whatever that
Yep.
is, on the growth of the next one.
That's fascinating. I've got another question, but I'm gonna hold it till the
Yeah, yeah,
Patreon
yeah. Sorry.
Patreon side of things.
Yeah, yeah.
Yeah, I think that we'll have to move it over, but this is very insightful. And thank you again, Shinar. I do want to thank
Yeah.
our sponsors before we do move over to the Patreon side of things. People Ease, Martin Electric, MLB Construction, Bonaccio Construction, Michaels Group, Catamount Consulting, Northeast Construction Trades Workforce Coalition, Daigle Cleaning Systems, and Five Towers Media. And welcoming our new sponsor, Curtis Lumber,
Yeah.
in the blue collar startup family here. And we're excited to have them on board as well. So we'll see everybody over on the Patreon side.
Hold on, before we go, one more thing. We got a new Patreon member. Just want to do a shout out to Nate over at NLH Property Management. Just joined yesterday into the Patreon side of things. So welcome, Nate. Thanks for
I know
joining.
Nate is a great guy, great company. It's awesome.
Nice. Nice. Well, you have to tell him that we shouted him out, although he listens to the show, so I'm sure he'll hear it. But thanks, Nate.
Very
We'll
cool.
we'll see everybody on the Patreon side.
And that wraps up another episode of Blue Collar Startup, A big thank you to our sponsors, Five Towers Media, Daigle Cleaning Systems, Daigle Fire Solutions, The Michaels Group, Martin Electric, MLB Construction, Bonaccio Construction, Peoplease, and Catamount Consulting for making this podcast possible. And thank you for tuning in. If you learned something or felt inspired, connect with us on our website at bluecollarstartup.io or email us at hardhat.bcsu@gmail.com. We'd love to hear your questions and topic ideas. Help us spread the word by sharing the show and following us on social media for updates. Until next time, keep on building, keep on dreaming, and keep hustling like your future depends on it.